Hello, welcome back. So Intel reported its earnings and they were an absolute disaster for Q2. The company did horribly, and we're going to be examining what happened in this quarter and what to expect from Intel. It's actually down about 8% right now, 8.3% is what we're seeing after hours, although they may be given a lifeline because we got the news of Congress passing a bill boosting US semiconductor production here. So it looks like there's going to be some boosting in terms of US semiconductor production because they are trying to increase the American competitiveness when compared to China, for example, when TSM, for instance, is doing much better than Intel in this case. So let's examine what happened here with Intel. I want to take a little bit of a look because there are obviously some negative things here and some potentially positive ones which we need to be examining. Now, Intel CFO says we are on the bottom after company misses earnings and stock sinks. Now, I'm not so sure about this one because the company's reported earnings here were absolutely horrible. You will see that what they did is 29 cents per share. That's adjusted, of course, versus the 70 cents per share that were expected. So they did way worse than expected here by a very big factor, and that is very concerning because a lot of semiconductor companies haven't done that well, that badly, and they have actually done much better. And so even though they are much more overpriced than Intel, if you're seeing this kind of results here, it kind of makes you think what is going on with the company right now, and you may be wanting to you may want to rethink some things here. Now, in terms of revenue, the company went down again, 15.32 billion versus 17.92, as it was expected by analysts. And we are going to be taking a little bit of a closer look at what has happened precisely. And I wanted, for this reason, to also take a look at this article, which I feel is a very nice article, explaining some things very nicely here, because you want to be seeing here what has been happening and what to expect from the company. Because if you see here, the Q2 non-GAAP EPS of 0.29 misses by 0.41 cents. As we examined, that's a very steep loss here. Same thing with revenue. They missed about 17%. And they also revised, and this is also another interesting thing that is worrisome, they revised their full year revenue guidance to 65 billion, to 65 to 68 billion versus 74.35. And if we take a look at our stock tool here, our stock evaluation tool, we can take a look at the income statement, and you will see that the revenue the company has been doing was sitting near 77, 79, 80, 70 billion, and now they're going down. They're going down to 67, 65 or 68. So they are actually going backwards, and they will be at similar levels to 2017, it looks like. 2017 to 2018. So they are going backwards, and this is obviously not a pretty sight. Now, we do know that they are investing in themselves. They are spending a ton of money in capital expenditures, for instance. But these kind of results are definitely very concerning here. Now, there are some concerning facts as well. The fact that they missed on data centers. They're not doing as well in data centers. Like, you could expect them to not do very well in the computing space, but in the computers, like personal computers. But what about data centers? Data centers will be growing and are growing already. And so this kind of decline is a little bit bothersome here. It's actually, it can definitely be worrisome. Now, you will see here that Intel is what the article is mentioning here, and for good reason. They had a really bad quarter here, and among other peers actually reporting some much better things. Now, Nvidia, for example, showcasing a massive 40% revenue gain. Now, okay, yeah, that was like 2 months ago or so, but still. AMD has also performed better. Both of these companies are way more expensive than Intel, though, and there comes the question, are you actually buying a more expensive company? Are you buying a cheaper company that could outperform in the future, that is not doing as well right now? This has to be a little bit of a balancing act here, and I typically don't really like buying expensive companies, but I also don't like buying declining companies, and if this keeps declining, it may be a concerning factor here. Now, Other semiconductor companies that we examined, Texas Instruments, for example, Broadcom, they have been doing better. So it looks like we're having some company specific issues here. And Intel is mentioning, for example, as you'll see here, deteriorating macro conditions, inventory, suppliers disruptions, competitive pressures. I'd say competitive pressures is a large one, a huge one here for Intel. It looks like it may be the case. Okay. Now, the other thing that I want to mention here, there were some positives, as you'll see. Of course, they reported the revenue gain on a mobile eye division, 40% year over year. But overall, things haven't been looking great for the company. And they have argued that supply disruptions had a negative impact. That definitely makes sense. But again, a lot of their peers haven't been impacted as negatively, and that's a worrying sign for sure. Now, the author of the article is rethinking his stance on Intel, is what he's saying, and it does make sense because right now, with the company's updated guidance, we're looking at a company that will become a little bit more expensive, although still not very expensive, but it may be approaching valuations that we're seeing in other companies, like, for example, TSM. Now the P ratio will be higher when the actual earnings the net income will actually be going down. And so it's going to be at about 16 is what the article is pointing out here. And they will earn 2.3 per share, though that's dollars, compared to 3.8, which is a massive difference, as you can understand. It's like 40% decrease here. So all these facts could point to Intel potentially right now being a buy that somebody would need to reconsider potentially, because it's of the current market conditions. It may see itself struggling a little bit based on what we're seeing right now from their earnings report. They were completely devastating here, frankly. And I'm not sure what they will be doing in the future. It may be a case where it could be an interesting company that is cheap, and now could be the time to buy and would be potentially a much better outcome for the future. But right now it definitely strikes some fear because of the financials that they reported in the previous quarter. They were worse than expected. I did expect them to be not as good as the previous ones, of course, but not that terrible here. They really had a bad quarter. Now, a bad quarter doesn't necessarily mean destruction for the company. Of course, it can happen. It can happen with the best companies as well, and it may, in some situations, be an opportunity to buy. Now, will that be one for Intel? This will be shown in the future, I suppose. But you have to be patient, of course. But another interesting thing that deserves some pointing out here is the dividend yield. And this is one of the reasons that I haven't been holding the stock so far. And I have mentioned it in previous videos. I don't really like the fact that they are paying a dividend yield, and the fact that their payout ratio is rather elevated. And it used to be elevated before before I was making this video. And I have pointed this out, but it will be more than likely even more elevated because the company is going to be losing on some of their net income. And so this factor could potentially cause a dividend cut. And if that happens, you could be easily seeing the company stock price go down even more, maybe even reaching 30 potentially, who knows. But all of these can be speculatory in nature, because they can happen and then reverse themselves over the course of time, of course. But when you're seeing these kinds of quarters that are negative in terms of earnings, and the company's performance is going down, it can deeply affect their dividends, for instance. And when that happens, it can affect sentiment and can actually affect actual results, because now you're getting paid less for holding the stock. And so it can actually, for sure, cause some bad reaction for the company in the short term or even the mid-term. But do I think that the company will be doing badly in the long term? Actually, no, not at all. I actually think that over many years of time, maybe the next 5 to 10 years, frankly, the company will be much higher than what it is right now. But of course, I can totally understand somebody who is thinking that the company has underperformed in the last quarter, and they may keep doing so for a while. This is definitely a potential. Now, again, with this kind of build that passed, maybe they're getting a little bit of a boost and a lifeline, but they definitely need to become way more aggressive here with their operations, and they need to get some of their market share back, because with the guidance that they have provided and what they have been doing in the previous quarter, things are looking a little bit more dire than I would expect here for Intel. And it may be, again, it may be an interesting opportunity and a cheap opportunity, but it may be at the time to just wait it out a little bit and see whether you can actually get it at an even cheaper price. Now, the company stock price was actually down more in the after hours before I made this video. It was about 11% at some point, I believe. But right now it's coming down potentially because of what is happening with the Congress here. We'll see whether that keeps happening or it's gonna go back to even more negative territory. But this is what is going on right now with Intel, and this is how I'm looking at the company. Again, this kind of dividend is worrying to me, especially because of its payout ratio, and especially because the free cash flow will likely get suppressed in the next few quarters. Again, could this last? It comes, we will have to see. It will take some time to see if that will be a lasting factor. I don't think it will, but we'll see. Thanks for watching the video. I hope that gave you some insight on what happened with Intel. It's going to be an interesting company to keep looking at and see if we can get it at an even better price. If it goes down even more, I will really think about buying this one, although it may be an even better opportunity if it actually decreases their dividend. If that happens, it may actually be a more interesting opportunity because it can give a steeper decline, so a better price, and then more potential for the future after it has dropped quite some, and its financials and its actual ratios are actually going down even more. So we'll see. But thanks for watching again, and I'll see you in the next video, in which I'm going to be making about Amazon, Apple. There's going to be quite a few more because tons of earnings today, and I haven't had the chance to look at them in detail yet. So they're upcoming, so stay tuned. I'll see you soon. Bye-bye.